Good morning, good evening, good afternoon, trader Steve here at Logic FX Trading, and welcome to my weekly technical analysis with fundamentals video. I'll try and put these out on a Friday, guys, so that most of you can see them over the weekend. Today's Monday, but since it's the first one, most of you probably won't see it anyway. The idea from my point of view is just to get the message out there that I exist, and this is a little window into what I do and what I know. From your point of view, you get a little bit of a technical and a fundamental analysis for the week for free. There you go. It's symbiosis, guys. One hand washes the other. Who am I? Name's Steve Nixon. I'm in my 50s. I was born in the 1960s. I was a mine manager, a gold mine manager in South Africa back in the 80s and the 90s. Since then, I've run many different businesses here in the UK. I'm from Northern Ireland. I'm from Belfast. That's why I've got an accent. And if you listen long enough, you'll pick it up, guys. Don't be worrying too much about that. I've been trading for 20 years, and I've been on TradingView for the last 3 years, and I've been training for about just over a year, guys. The reason I got into training was so many people were asking me on TradingView, Steve, do you train? So eventually I started doing it. So with a year under my belt, I'm ready to start marketing and moving on, guys. This little introduction will last 5-10 minutes. If this is the second or the third video, guys, just zoom forward 5 minutes in and you'll see the charts on the little video there, and then we can go from there. Just to finish up on our little introduction, let's just take this as one of the, we'll back up what we say in here with charts on TradingView, and obviously at the bottom of each chart all the links are there, guys. Premium Pro account, so we can have links. That's the website, that's Twitter, that's Facebook, that's Telegram. If you sign up to the Telegram account, guys, everything and anything I post, you will get instant message of that, so you'll miss nothing. And obviously then there's a Flipboard magazine, which we'll look at in a moment, where we put up all the fundamental news and obviously fundamentals also through Twitter. Just a quick look at Telegram, guys. I have several accounts. That account there is the free one, which you can just sign up to via that link that I showed you in a moment ago. And as I said, any videos or anything I put out, any charts, you'll get a notification of it. And then the other one is the private channel for anyone that has subscribed to the website or has paid me to train them. Okay, guys, that's enough for the garb. Let's get on with it. As I said there, let's have a quick look at the website. This is the website. Loads of free training on there, guys. Basically, the fundamentals of Elliott wave theory. You'll need to know that before you start doing the training. Before you sign up for training, guys, go through there and know your fundamentals so that I don't have to go through it again. This is the actual training, pre-recorded training. Obviously, we do live training as well. But for anyone who, you have a spare hour, there isn't live on at the moment, you can go and you can go through everything. Personal trading strategy, money management, loss aversion, compounding concept, right down to the analysis, identification, motive waves, zigzags, triangles. Obviously, the next level up from this free stuff. And then we go on to interpretation, Fibonacci, MACD, etc., guys. And then obviously every single day we do a recording for subscribers. Today was the 216th. We do those 5 days a week. Okay, news and reviews, yet again, is all free. If you go over to here, anything I post on YouTube will appear up here, guys, including now any recordings we do on TradingView. We can also upload those directly to YouTube, and they will come out here, which is fantastic. What else is on here? Subscriptions. It's just a description of what you get for what money, guys. There I am. At the moment, it's $30 a month, guys, to listen in on all the trading room stuff and to get the premium Telegram channel. If you want me to train you now, guys, obviously these prices will go up with demand, but at the moment, with live training webinars, the recorded lessons, the premium Telegram, $400. And if you want me one-on-one, guys, training sessions, $800. How long does this last for? Lifetime, guys. If you sign up for these, you have access to everything that I do for the life of the project. Hopefully, I'll still be doing this into my 60s and 70s. That's the plan. So if you sign up, guys, hopefully by that time you'll be able to do your own training, your own trading without my help, but it's there if you want. There's the Flipboard magazine link, guys. We go over to Flipboard. Anything that I see, any news article, anything I see that I think is relevant to what we're talking about in our analysis, and I do this every day with the guys in the training room, I flip over to here and then we can look at them. I'll also do a video on each of these, not each of them, but we'll pick one or two and we'll do 2 or 3 news and reviews videos a week, guys. That's the ones that we look at just over there, which will be posted to YouTube. Where you are, you're probably watching this on YouTube. There's news and reviews. That was only the 5th one we did, guys. So that's where we'll get our fundamental news. Obviously, Twitter as well. Anything that I see on Twitter, we'll post out there. So pick pick whichever one is the most convenient for you. The problem with Twitter is, guys, that my posts will get lost among everything else. So I would suggest that you sign up to Telegram if you have it. Okay, there we go. Let's get on with it, guys. If there's anything forgotten, I will put in next week. Start with DXY. That's where we are. This is how you will know that I've started doing the trading. When you zoom along the bottom of the video, you'll see the chart, guys. We start with the dollar index, guys. Why do we start with that? Because it's the most important chart out there. If you can understand what's happening in this chart, it gives you a lot of information about all of the major pairs and a lot of commodities, because the commodities are often traded in dollars, guys. So the likes of gold, silver, platinum, gas, oil, etc. are all traded in dollars. Therefore, understanding what's happening to the dollar will give you an insight into what's happening over here. So we always start with the dollar index, guys. Okay. It's also the biggest economy in the world, so it's a good idea to know what's going on with it. So what's going on with the dollar index? Right, any of you who know me or have been watching me or following me, I think you should just move on a little bit, because I'm going to go through what you already know. This is a channel that the dollar has been moving in. That's a diagonal there, guys, a starting diagonal. That is a complex correction. That is a huge impulse that everyone should have made lots of money on. Then we went into another complex correction, a sideways flat complex correction, as opposed to a complex zigzag, which would have brought us back down. Then we had a 5th wave and a finish. That was the start of 2017. And during 2017, we had a beautiful 5-wave impulse down in what for me is an A position, because we've had the end of an impulse. So the next wave is in the A position. Now, for anyone who doesn't understand or know anything about, let me just clear that up a little bit, guys. Anyone doesn't understand anything about Elliott wave, when you have 5 waves in an A position, the move isn't finished, guys. An A position or an A wave should be a 3-wave structure. If you've had 5 waves, you're there, you're in that, which means you should get a 3-wave structure and then a 5-wave. Some sort of 3, it could be a flat, it could be a triangle, which I know is 5 waves, but you know, it's a sideways correction. 3, and then you should get another 5 down, which could be a diagonal. I'm not telling you anything that's not out there, guys. If you go to the free videos, you'll find all of that out. Okay, so remember that what we are looking for using technical analysis is we are looking for high probability setups, guys. And there are times when you know with a high degree of probability, there's what's going to happen next. That's when you trade. There are also times when we have not got a clue what's going on. No matter what anyone else says in TradingView, there are lots of times when we're scratching our heads and we're all guessing. We're saying, hey, it looks like it's doing this. That's when a structure's in development, guys. Okay, so from here, we had a 1, 2, an extended third wave. We had a fourth wave, zigzag. So from this position, high probability, you're going to get a 5 wave impulsive move down, guys. And that's exactly what we had. That was another one that was very, very easy to trade. This was relatively easy to trade because at one point, once we realized we weren't in a little zigzag, once it had broken out, we realized we were in a third wave. The best things to trade, guys, are third waves and fifth waves. There's your fourth, sorry, there's your second, there's your first. First, second, third, fourth, fifth. That wave's usually the longest and the most impulsive. That one's usually the most predictable, okay? Because by the time you've got that, it's pretty obvious you're going to get a last wave, guys. That one's very predictable. That one's the most impulsive. And then when you get in an ABC, A, B, when you get that with possibly a double top, sometimes it can be expanded or contracted, but that C wave is usually a 5 wave impulsive wave. So their high probability of a good impulsive wave, their high probability of good impulsive wave, their high probability of good impulsive wave, guys. Those are the places that you are going to get your best trades. If you're trying to trade anywhere else, like corrections, you're going to struggle. Now, that's not to say that you can't trade in corrections, because a correction on a higher degree, of course, has impulses in it. For example, the A wave that we just drew a moment ago, that's a 5 wave impulse, that's a 5 wave impulse, but it's within a zigzag. So you can trade corrections with a high, with a high degree of probability and with a high degree of impulsiveness, but it has to be in the right time scale, guys. You don't want to be trading them on a 15-minute time scale, and really you're looking at a 4-hour to a daily time scale for a correction, and then we go and look on the 1 hour, maybe the 50 minutes for setups. But certainly you want to have a bigger target rather than jumping in and jumping out on a daily basis, guys. Because if you jump in and jump out, and this is just extra stuff, guys, if you're jumping in and jumping out of trades every day, your account will do this. Maybe you get a wee push up. Your account will do that, guys, because getting into a trade and getting it away from zero is just about the hardest thing there is in trading, guys. Getting a trade into green. So once you get it into the green, let it run, guys. Let it run. Don't be jumping in and out. If you jump in and out, you'll get it wrong more often than you get it right, and your account will empty. Then you'll panic, and you'll start putting bigger risk on to try and make back the money you've lost, and eventually you'll blow your account. Okay. Use low-risk trading strategy, guys. Okay, let's get on with this. So where are we in the dollar? Well, we had that impulsive move down. We're in a 3. And we should now get, once this is finished, and we don't know if it's finished yet, once this is finished, we should get a 5 wave impulsive wave down. Sorry, motive wave down. It doesn't have to be impulsive. It could come down in a diagonal, guys. it could come down in a diagonal, which would look, you know, more of that order of nature, sorry, order of magnitude. And the problem is then, if it is a diagonal, it's going to be tough to trade. So, you know, if you caught that one, chances are you're going to want to jump out of it again if it comes up too high. Then you're going to want to try and catch that one, jump out of it again. Whereas if it's impulsive, you might want to ride through those second and the fourth waves. But we'll see how it goes as and when. Now, the reason that I also look at fundamentals is that you can look at a technical chart and you can say, hey, we're in an A position, we've had one down, we've had one up, we're going to get the next one down. In other words, we should get that. Timing's everything, guys. If you catch that at the right time, you'll do well. If you don't catch it at the right time, you'll keep getting stopped out. Therefore, we look at fundamentals. At the moment, I don't see, and the reason why this has been going sideways, my initial target for this was up here somewhere, by the way, guys, up around 100. Because I thought that move there would have been more impulsive, like this one. Turned out to be a diagonal rather than an impulsive move. A lot of people have called that as the top. I initially said, no, we'll get a pullback from there, and then we'll get another move up. I don't think that's right anymore, guys. The Fed came out the other day. Remember, we're all on a daily time scale. Let's go down to the 4 hours, get a closer look at this. The Fed came out last month and became very dovish. At the end of last year, 2018, they were very hawkish. They said they're going to increase interest rates in the US by another 1%, putting it up 0.25 or 25 basis points 4 times during 2019. They've now reduced that right down, guys. The last time they increased interest rates, we just see what happened to the Dow Jones, and we predicted this as well, by the way. There's what happened when because the Fed was hawkish. Then they turned dovish, and now people are piling in again. We'll talk about this another time, guys, but we did predict that. When we had this, I said, guys, this is an A, B, and there's a high degree of probability we will get a C wave, which will break that bottom, which is what we got. Let me refresh this, guys, because this is running slow. Okay, everything's live here, guys. There's no editing. There's no cutting out. We're just going to run live. What you see is what you get. Right, so back to the dollar index. Given that this is a weekly, what should we expect next for the dollar? Well, when we were coming down here over the last week or so, I was saying to people, guys, don't be trying to trade this back down to the bottom of that channel. Because obviously, because we're expecting it to come back down to the weekly channel, sorry, let's zoom in a little bit. Because we've been expecting it to drop into this sort of region, and if it gets there, then we've got to, you know, we'll go through a whole decision process. Is it going to bounce back up, or is it going to go further down? We'll not know that until we're there. But because that's what we're looking for, when it started to drop here, everyone was saying, hey, the dollar's going short in the way that they do in TradingView. You know, capital letters, the dollar's crashing, etc., etc. Guys, do not listen to anyone that writes anything in capital letters or is very, very, you know, definitive about what they're saying. You cannot be definitive in trading. If you're definitive, you will not keep your mind open to other options, and you'll lose your money, guys. You've got to keep your mind open, okay? So when we were coming down here, I said to everyone, that guys, be very careful. This isn't going to keep going because that was impulsive. Therefore, this is a corrective wave. Now, it might turn out to be a 3-wave back up to the top of the channel, and I suspect that's maybe what it is. But it certainly wasn't the start of the crash, unless it does this, and we'll look and we'll see, and we should know very soon. What I also said last week to my traders, by the way, I didn't have one of these out, so don't be going looking for another one of these. What I said last week is, guys, if you want to get short in the dollar, wait for it to break and then look to get short from up here. Because we all know things move in a sawtooth manner, guys. So if this is the start of an impulsive move down, which possibly it is, then you're going to have to wait for the pullback before it starts to go. Is that what it is? We don't know at the minute, guys. That's why we trade structure analysis and not just Elliott wave. Because if you have you know, 8 hours in a day to sit watching charts, and you want to count every little move and every little twist, then fair enough. But most of you don't. Most of you have jobs or other things to do, and therefore you need to trade in a higher time scale, guys. So what do you do about this? Well, at the moment it looks quite impulsive. It doesn't look, corrective would look more like that, guys. So at the moment this looks impulsive. If it were to break down here, we might then say, hey guys, let's keep an eye on this, because this could go and break that, and therefore if it breaks that, when it gets to here, we can decide whether it's going to go further or whether it's going to stay in the channel. We don't know that yet. I suspect because of the fundamentals that it's going to keep going up. Now, what do I mean by that? Well, if you know how this this DXY, this dollar currency index, is made up, and let me just pause and go and show you what it's made up of. Okay, I didn't actually need to pause very long. That only took a few seconds. This is what the currency index is made up of, guys. It's weighed by what was, going back into history, the USA's major trading partners. The euro 57.6%, the yen 13%, the pound 11, almost 12%, the CAD 10%, and then Swedish krona and Swiss franc. So the Brazilian is not in there, the real's not in there, the Chinese yuan's not in there, the Australian dollar's not in there, the New Zealand dollar's not in there, you know, the South African rand, a lot of currencies aren't involved in that, guys. So while it is a very good indicator of how to trade the major pairs, it's not so good for predicting what they call the emerging markets. So the likes of the real, the likes of the ruble, the likes of the Turkish lira, etc. Because what you'll find with those is that while the dollar has been climbing on this 4-hour time scale against the CAD, climbing against the New Zealand, remember, because the US is on the other side of the equation here, climbing against the Oz, climbing against the pound, remember, it's on the downside here, and the euro getting stronger against the euro. If you go and look at the emerging markets, as they're called, the likes of China, it's doing the opposite. Dollars on that side of the equation, not this side. So the Chinese yuan's getting stronger after a big drop. Sorry, not the ruble. Sorry, the ruble. Yet again, huge move up against the ruble, and then a sideways correction. Not a massive move, continued move up. I hope you understand what I'm saying here, guys. We had a big move up there, and then a recovery of the Turkish lira. So in those situations, the lira, the ruble, and the yuan were all getting stronger against the dollar, even though the dollar was getting stronger against Europe, the pound, the New Zealand, the Aussie. So that's the limitations of DXY. The only thing is that so far as the the likes of gold and silver, the commodities are concerned, this is probably the price that you use, guys. Okay, I hope I haven't complicated things there for you, but what I'm saying is that even though this is a fantastic chart to use, we've got to understand what it is that we're actually looking at. So why did I talk about that? Well, the point is that, yes, on a technical level, lots of people are expecting the dollar to do that. But looking at what it's made up of, what this index is made up of, I don't see any strength in the European economy. They're not going to hike interest rates until at least the end of this year. The Japanese economy, they're struggling to get inflation up to 2%, guys. So they're even looking at maybe, well, continuing quantitative easing as opposed to maybe decreasing the interest rate. Their interest rates are already in the negative. What else made it? Brexit, the pound, even though it's only 10%, there's a bit of a recovery in the pound at the moment, which is something we'll talk about in a moment, but it's not going to be enough to pull the dollar down. So that's the reason that I'm kind of saying, guys, we are probably going to end up in this sideways movement with the dollar. Does that mean that we can't trade? No, it doesn't. What it means is that when it gets to the top of the channel, potentially we'll start to look for it to come down again, guys. That's why I'm more biased towards it going up than that being a correction and dropping. Does that mean that definitely can't happen? No, it doesn't. The other big factor in the dollar at the moment is the Chinese US trade talks that are going on. But recent news coming out says that they might be getting to a point where they're going to get some sort of deal done. The negotiations are going well. That can only be good for the dollar, guys. Now, it might be fully priced, so even though it's good, doesn't mean it's going to do that, but it may just keep it in this range. Okay. If that had gone bad, it would have been bad for the world economy, possibly worse for the dollar than maybe the euro. Therefore, you might have seen this index coming down, guys. Okay. We'll talk more and more about this each week. So if it's confusing for you at the moment, don't be worrying about it, guys. We will, we'll develop those ideas as we go along. So on the 4-hour time scale, what am I looking for the dollar index? At the moment, it's pushing up. I suspect it will go up like this, guys, obviously. So we're looking for it to go up. If next week it's broken out, we'll look at it again. Okay. So what does that mean for the Euro USD? Well, this was the move up. There was the break we were looking for. You can see what I was saying this morning in my trading room. We're looking for a short trade on this. But yet again, you've got to find your way into it, guys. So you've got to find some sort of setup that you're comfortable with to get into this. Where would your target be? Well, quite possibly there for your first target. And the second target, well, I don't think it will go much further than there, guys. So your first and second targets might still be very, very close to one another. The pound's a bit of a different animal, guys, because at the moment, things are looking good for the Brexit negotiations. We're still not sure whether there's going to be a deal or a no deal. But at the end of this month, March 2019, the UK is destined to leave the EU. So this month's a very good month to be keeping an eye on the pound. If things go well, the pound is still undervalued and it's got some more upside to it. If things go badly, the pound could come crashing back down again, guys. The one thing I would say is, if you're trying to look for trades and you're doing your analysis on this higher time frame, you're going to get your best trades from trading two currencies that are going in opposite directions. In other words, if the dollar's going long and the pound's going long, it's not necessarily going to be the best place to catch a trade. If you wanted to trade the dollar against something, then you're going to have to look for something that's dropping. For example, the CAD or the Aussie or the New Zealand. Those are the better places to catch a long US dollar trade. The pound not necessarily. Doesn't mean it won't go long, guys, but you won't necessarily get as big a movement as you would if you traded against something else. For example, if you wanted to trade the pound long, yet again, look for something like the Aussie, maybe the New Zealand, maybe the CAD, and we'll go and look at those in a wee second, guys. Let's just go and do that. I don't want to go through these in a routine rota type thing, guys. I want to look for things that you should be looking for this week. So the Aussie, for example, if we go to the Aussie index, it's going sideways at the moment. You can see there what I've drawn there. It's going sideways at the moment after a long drop. Now, there is a Reserve Bank of Australia interest rate decision today. So most of you will probably miss it because you'll probably not even see this before then. Depending on what that looks like, the Aussie will either continue to go sideways or it could drop. I don't see it going up, guys. I think they're more likely to cut interest rates than increase them, but they may just hold them steady. Therefore, we could see the Aussie continuing sideways. Sideways is okay, guys. So you've got a sideways against the pound going up. That would be a half decent trade, guys. So let's go back to the, where were we? Pound Oz. All right, it's a bit further up than that. Gone too far now. Goodness great. Oh, there's it there. Sorry, I couldn't find that, guys. Therefore, that's probably a better bet. Not necessarily today, guys. Why? You can see there, it's already moved up. We're looking for a pullback before, we're looking for profit taking. We're looking for, a little bit of a pullback, guys. You can't jump in there. Can it go long from there? Yes, it certainly can, guys. But that, for me, is not a good setup. You need to see it coming back down a little bit, like that maybe. With alternation, maybe that will go from there, guys, because that's a zigzag against a flat. Quite possibly go long from here. I don't like trading flats out the top or the bottom of flats, guys. So I'll not be trading it today. But what you may get is a 1, 2, 3, 4, 5, and then a pullback. There's probably a better place to get involved. But that'll be next week, guys. Okay. Where else were we? Let's go back to pound USD, Aussie USD. Did we already look at that? Yeah, no big setup on it at the moment, guys. You'd need to look for setup in that. I suspect, given that we're looking at the pound going, or the dollar going long, and the Aussie to at least go sideways, I suspect this will come back down, at least into the channel. New Zealand, same thing. We're looking for it to drop into the channel. You're going to have to find a setup in there. CAD. Oh, there you go. CAD's already moved again, guys. This is on a 4-hour, remember. We had the alarm there. We were looking for a better pullback. But I did say to the folks this morning, sorry, that's just gone off because I moved it. I did say this morning, listen, guys, this could take off again. But if you're not in it, you really would prefer to wait for a better pullback, for a setup to get in. But if you got in from down here, you can see there, put your stop to 0. I would now move my stop up to there, guys, to protect what you've got. This may push on up. This could be the start of a really good move, guys. Well, where's it going to go to? Well, it's been in this channel for a long time, so I suspect, now we have a bigger channel there, so we need to be wary of that as well. Let's just have a look at that one, guys, before we go calling this. Oh yeah, don't be worrying too much about that. That was just me trying to get some sort of idea of what was going on here. Chances are, actually, if I just leave that, take that out, guys. We'll put that in and we'll say, well, there's your target. If it gets up to there, then we'll decide, is it going to break the top and carry on up within this channel, or is it going to break and come down? For that to break and come down, the dollar would have to start going short, guys. But as we said, on the time scale, or the daily time scale, on that time scale, that could give the dollar time to get back to the top there and then find a reason to come back down again. So going back to that US CAD, during that time, this could potentially push up into this sort of region. I don't know if it's going to go higher, guys, but it could possibly go higher before then dropping back down within the channel. But guys, that's several months ahead of ourselves there. We don't need to worry too much about that. For this week, CAD long, if you're in it, fantastic. If you're not in it, you're going to have to find a way to get into it. But I wouldn't be too keen in jumping in now. Even on this daily time scale, you can see what happens. Listen, guys, this could even be an ABC before it went. See that? I don't think that's what it is, but be wary of jumping in now. Even if we're to climb on up, obviously it's not necessarily going to go back up like that. That's what we would love. But chances are it'll move up like that. So you've had a nice move up, you'll get a correction. Nice move up, you'll get a correction. Had a nice move up, we'll get a correction. Nice move up, we'll get a correction. So we don't know where that turn will come. Therefore, you don't want to be jumping in now unless you caught that break. Get your stop to zero. And then if it comes back down again, fair be, you haven't lost any money. If it continues on up, you've done grand. If you get in from the bottom, I think you're pretty safe for a while. I would stay in this and let it run, guys. Yet again, get your stop to zero. If it comes back down, you haven't lost any money. First rule, don't lose your money. There's another big move. Let's get down to 4 hours. Yet again, guys. What you're looking at here with a push away from trend, you're looking for a pullback in the trend, and then you're looking for a break. We've had the break, now it's pushing up. How do you trade it now? Well, if you're in it, fantastic. If you're not in it, you're going to have to wait for a pullback. If you get the right setup, see if you can get into it long. Swiss. The Swiss has shown a little bit of strength recently, guys, so I'm a little bit wary of that one. Stay away from it. China. I was in this one. I got stopped out this morning. Stopped out for 0, which is okay, guys. You're not losing any money then. I suspect it's going to continue on up. I suspect it's going to do that. Possibly back to the top of the channel. Remember, we're in 4 hours here. It gets to the top of the channel with the side. Is it going to turn and come down, or is it going to break out? Remembering what we said about the emerging markets, even though the dollar's going long there, it could be pulled back down by the Chinese yuan. But in the meantime, I suspect that's going long. Having said that, guys, the one thing I did say the other day was, listen, when we were here, which is where I got into it, I said in the trading room, be careful, guys, because this could be a little ABC correction. So if you get into it, get your stop to 0 in case it comes crashing back down again, in which case at least you get away with not losing any money. As it is, it came down, stopped me out, and at the minute, given what we're saying about the dollar index, I don't see a setup to get into it, guys. So let that develop a little bit. I wouldn't want to jump into that just in case that is a little ABC and it's going to drop back down to the bottom of this channel. If we'd have been lucky, it would have done that. That's what I was after. The last time it came down, we had the little push up, pull back down, and then it took off. Push up, pull back down, and I was hoping that was going to take off. Didn't do it. Not to worry. US yen. Looks like a bit of an ending diagonal up going on up there, guys. Not quite yet. maybe on a 1 hour time scale, you're starting to get a drop off. I wouldn't want to trade it down. What I would do, wait for a pullback, look to trade it long. Ruble. Yeah, you can see there that hasn't taken off the way the other ones have. But yet again, this is emerging market as opposed to one of the majors. Although they're all called majors because the US dollar's in them. But, you know, this isn't one of the major currencies. That's basically what I'm trying to say there, guys. It's still an emerging market, they're called. So this one hasn't taken off yet. Can it do that? Quite possibly. I'm looking for some sort of ABC there, guys, before maybe coming back down again. So I still think there's a lot of upside to that. But I've never traded the ruble in my life, so I'm not suggesting you suddenly jump into it and trade it. I'm just showing you what's on the charts, guys. Turkish lira, same thing, guys. We're looking for a pullback and then a push up. South African rand. Now, this is an interesting one because last week when the dollar was still falling, when we got to here, guys, I actually put this in when we had this little correction starting. I said, hey, guys, listen, if the dollar continues to drop, that will boost gold price. Gold price, good for the rand because they produce a lot of gold. Therefore, we could potentially get a little zigzag or a little ABC here and then a break, and this could come back down to here. As it turned out, it went the opposite direction with quite a move. The reason for the move is, first of all, the dollar strengthened up. Secondly, because the dollar strengthened up, look what happened to gold. But there's more to the dollar price in that move than, there's more in that move than just the dollar price. This is people starting to move to risk on rather than risk off. What I mean by that is they're moving out of safe havens because they're starting to think if this China-US trade deal gets done, there's going to be a lot of good opportunities out there. So they're taking their money back into cash, maybe back into stocks, etc. There's a UK taking off. We were looking at that earlier, guys. And we were saying, listen, on the Dow Jones, we're looking for it to break. Why? On a technical basis, guys, when you get a move that size, you're really looking for a correction to get in from there again. S&P looks the same thing. By the way, I wasn't saying here that I definitely thought it was going to come down there. I said it was a possibility, but we could also just get a little zigzag correction before going long there. Why is the UK different? Because the UK is being pushed and pulled by Brexit, guys. Every story that comes out that looks like the UK is either not going to leave the EU or it looks like they're going to leave with a good trade deal will push the UK index up. And you could also go and look for some great trades on UK companies because everything's undervalued because of the downside of Brexit, particularly companies that trade with Europe. Not all companies in the UK trade with Europe. A lot of them are international, like BP. BP is not going to be affected by this, guys. But companies that are based in the UK and trade a lot with Europe, you'll find that as the worry about Brexit decreases, you'll see those stocks really, really rising. Guys, you're going to have to do your own work for that one. French, the same as the S&P and the Dow Jones, had this big move up. We need a correction. Just from a technical point of view, guys, we need a correction. We'll see, does that turn out to be an impulsive move back down or just a correction before going long? That's the one we don't know. Initially, I was kind of thinking that this whole correction isn't over yet. And this could potentially be a dead cat bounce, guys. But it's gone on a little bit too long. And we're starting to, we went from we were going to have a slowdown, world economy in 2019 into 2020. Over the next 18 months, basically, we're saying at Christmas. Then it went to possible recession because of the trade tariff war, whatever you want to call it, between China and the US. And now that that looks like it might be settled, now that Brexit looks like you might actually get a deal, and there's no definites about either of those, but the possibilities, remember the market moves before the news, not necessarily after the news. The only moves after the news if the news is different to what the market was expecting. That's the other thing about trading the news, guys. And we'll talk about that later as we move on. So we're looking for a pullback there. That might have more upside to it yet because it did have quite a correction there before it moved up. But as you can see, I was still, from there, I was basically looking for something to get in. See that? That was me saying, remember when I do my analysis on the daily time, or on the daily trading, live trading room, guys, we do it in the 1 hour time scale. So you'll see a lot of little, that we were looking, we had to push up, and I was saying, guys, to get into this, you need a pullback before it goes on up. And that's basically what we had. There was the arrow. And from here, now I'm saying we're looking for a correction of that. Maybe not as steep as that one, guys. I'll tell you why. Because we had that looks like an ending diagonal to me, with possibly a 50% retracement. Let's zoom in. Often with an ending diagonal, get a 50% retracement, guys. Almost bang on, guys. 50% retracement pushed on up. Now, let's clean that. Now, guys, I know this is a wee bit all over the place at the moment, but the structure will come. We'll get into a routine. We'll get into a structure. At the moment, I'm just bouncing off the ideas that are popping into my head. So we've had a push up with a correction. We're in another wave, guys. This could be a zigzag that then drops. And I suspect it's more that than an impulsive move. But at this point, we don't know. If it is an impulsive move, then I think there's more upside to this before you'll get a correction. If it's impulsive and that's a 1, 2, you probably get a 3, a 4, and a 5. And maybe it won't even come as deep as that, guys. But if it turns out to be a bit of a zigzag, and I'm not saying that's what it looks like, but it could possibly be, then when we get up to here, I need to be careful of my diction, my Irish accent. I sometimes get carried away with myself, guys. Possibly this could push on up, give us a correction, and then another move. But if it's a zigzag, it could end around here somewhere, and then we'll see a move down. Aussie, same thing, guys. It's climbing on up. We need a correction before you'd get into it. Remembering that the correction could turn out to be a further push down. And the reason I'm saying that, let's go back to the Dow Jones, and we'll do it on a 1 hour time scale. The reason that I'm not overly enthusiastic about calling these long is because, and we need to even go further out, guys. I did this the other day on a video. For me, guys, this was the first push up. That is a second wave, corrective wave, possibly an expanded flat. This is the next move up. There's possibly a 1, 2, 3, 4, 5 in that. I think we need a correction of that order of magnitude in here before this continues on up. If that is true, then this is nothing, guys. This could go, I'm not suggesting it's going to come away down here. What I'm suggesting is that it could end up as a big flat correction throughout the whole of the year before the world economy starts to really kick on again, and then you'll start to get your push up. That's okay because this is a 4-day time scale, guys. But I wanted to show you on this to tell you that this could well be the point where we get another correction of that order of magnitude. Now, I do know that that broke there, but if we go and we look at the S&P, you can see it's more of a expanded flat and not very expanded. It's almost just a regular flat correction, actually, guys. You know, granted, we're on a 4-day time scale, and catching the very top would have been tough. But you can see there, bang, down it came. Off we went again. 1, 2, 3, 4, 5. We need a big correction of that order of magnitude here for me. Now, that's going to last for a year or two, guys. That's why I'm not calling this long. And given how high up it's come compared to the previous high, at some point I expect this to correct back down. Purely on a technical basis, guys, not even taking in the fundamentals. So given that we're talking about the world recession not happening, and maybe there's just a slowdown, why would it drop again? Well, purely and simply because that was maybe saying, hey, we're going to get a recession. Then they said, no, there isn't going to be. Then the reality kicks in that says, hang on, there's not going to be a recession. But, oops, didn't mean to do that. But we are seeing a slowdown, in which case this could drop again. Not necessarily as sharp as that, guys, but just, you know, kind of a sideways movement for a while before it starts to go. Okay, what have we covered? Gold, silver, getting back out to the 4-hour, or back into the 4-hour time scale. Traded this up, I traded that up, I traded that up. Got out right up there somewhere, guys. Tried to trade this down. Got stopped out because of a flash on my particular broker, not on this chart, but my broker's chart. We had a flash that came up and took me out here twice. I got stopped out there and I got stopped out there, despite the fact I entered here on the way down. Price didn't get up to 16. And then it went to 16.8. And the second one got stopped out again, and then it dropped. Guys, the reason I'm telling you that is that, first of all, we got the analysis right. But secondly, these things happen sometimes. The market's not against you. Nobody knows what you're doing. They just happen. They can be very annoying, because that would have been the best trade that I was in of this year so far, and would have taken my training account, which I haven't mentioned so far. In the Logic FX trading, I train a training account, guys. Trade a training account, which only has $1,000 in it. So I'm trading at the same level that you guys should be trading at if you're trading with money at all. If you're still learning, do not risk large amounts of money, guys. If you can trade a $1,000 account and make profit on it, then you can slowly increase the amount of money in your account, continually making profit as you go along. Do not start with $10,000 or $50,000 and think that the more money you have, the bigger your probability is that you're going to make money. No, guys, if you can't trade a $1,000 account and make it profitable, you should not be risking any more money, guys. Okay, so at the start of this year, I opened a small account. Each month, I put another $100 or so into it to slowly build it up the way you guys should be doing. Start with, I don't know, $500. The next month, put $100 in, $150, and keep putting that in every month, and slowly but surely build your account up like that, guys. Then if you get to a point where you say, hey, I am making a profit, I want to now boost my account, then start putting $500 a month in or something like that, guys. Don't go from a $1,000 account to a $10,000 account, because it will be a shock to your system, because you will have gone from losing, you know, $10 a trade to losing $100 a trade when you get it wrong. So be careful of that as well, guys. So there we go. Why has that dropped? Well, technically it was going to do that anyway, because we had a really nice move up. We had that nice move up. We were going to get a correction of it. We had also come up into the region of the channel. So we were going to get a pullback. I'm still possibly looking for that to go out to there, guys. But that will depend on what happens with the world economy. If the world economy grows more than we expect, then that won't happen. But for me, that is an impulsive move up. It's an ending diagonal. It's a correction. And I'll be looking, when this starts to peter out, I'll be looking to trade that long. If that doesn't happen, guys, then obviously we'll look for something else on it. But at the moment, if you're in it, I would just stay in it for a while. Maybe tighten your stops up a bit. But you should have made nice money on that one. Remember, this is a daily time scale, guys. Let's take it back to the 4 hour and show you what I'm talking about there. Bump, bump, bump. This possibly will give you a 4th wave, a 5th wave, finish. And then from there, we'll look to see, is it going to start climbing again? Ending diagonal. When you get an ending diagonal, you'll often get a 50% retracement. We take it from the lowest to the highest. It's coming into a 50%. Doesn't mean it will definitely stop at 50%, but that's the sort of movement you're looking for if it's a correction of that and your trend's still in that direction. If trend's still in that direction, and we don't know yet, if trend's still in that direction, then you'll get the 4th wave pullback and a further push down. It could even come back down to lows, guys. I doubt it, but it's possible. We'll see next week how that's developed, and then I'll give you another idea on what I think about that. And then we're just going to finish up here in oil, guys. We called this one. Let me just Okay, sorry. Over to oil. Call this one, guys, short. As this was coming up, I said, guys, this is going to go short from here. I was expecting possibly just a little C to break that bottom, maybe down in the trend there, and then look to go long. Guys, it just kept going and going and going and going and going. Anyone who caught that, that's a trade. That's the sort of trade that will put you into the green for the year, guys. Trades like that, remember, we're on a 4 hour time scale. A trade like that will put you in the green for the year, provided you have the courage to stay in it, guys. Then we got a little triangle here, and then it dropped again. From there, purely and simply on technical analysis, if you have a move like that, you're going to get a correction of it, guys. That's possibly what this is. It's quite funny that that looked very similar to the dollar index on the higher time scale. I'm not saying that they're related, because they're obviously a different time scale, but it is very interesting that we've had the similar structure. Look at that structure. Let's copy that, guys. And by the way, before we do that, I'm expecting this to drop again from here. Okay, as a bit of a correction of that. It may now start running in a channel as the dollar's doing. Why? Because the market's unsure whether the world's going to go into recession or not. If it doesn't, this will continue to climb up, guys. If it does, it'll drop. And while they're unsure, it'll go sideways on this 4 hour time scale. Okay. At the moment, I'm looking for a short on it. Let me just zoom in. And as I said, we'll finish with this one. Um, 4 hours. Let's try 1 hour. Okay, there, guys. Short oil. Question mark. Oops, that's a video. There's another one. I also put a chart. Oil on the way down. There you go. Right. So I put this chart out last week. We'd had this break. We had been looking for a correction of that move. So then it was a case of saying, where's it going to correct to? You see I've circled the 61.8. In other words, there's a possibility it will correct there before continuing to go long. As it is, what it actually did was it came right back up to made a double top. But it didn't change our opinion of it. It dropped again, guys. And I caught that part of it. That part down. Now we're in a position where we're looking. There's that move down, guys. Let's take it back to the 4 hours. Now we're looking for it to drop again. Okay. What we're getting here could be what we were looking for last week. Last week we had that. And I was saying, guys, we've had to push down. We're going to get a correction. Could move on down. It climbed right back up. Tempted to say double top. And then down it came again. Sorry. Down it came again. Same situation. Remember, you don't get involved until it breaks. Not that much. If you wait till there, you've missed it. Until it breaks. That's why we didn't lose money in this last week. Why? Because it didn't break down, guys. We just watched it climbing back up again. And then the little thing that I wanted to show you, this structure, let's just copy those bar pattern, guys. We'll do that from there to there. And then I think I can copy that, and then we'll go to DXY. Now, obviously, there's going to be a difference of scale. Do you see that? Do you see it there, guys? Let me just paste that if I can. Paste bars. Look at that. All right. This is, oh, yes. This has taken from March 2018 through to now. That has taken a year. Remember, what's happened here has only taken a few months, guys. So it's of a different order of magnitude, but you can see yet again structure, guys. It's the structure we're looking at, the shapes that these things make, and how if you're looking at it long enough and often enough, you start to see high probability situations appearing, guys. Now, I'm not suggesting for 1 minute that this is giving us a good idea of what's going to happen next, but I'm trying to show you that even though one of these is on, it's taken a couple of months, and this has taken over a year, look at the similarity, and there's no correlation between these two, by the way. Yes, oil is priced in dollars, but I want you to understand that is a very small move compared to that. That is from start of 2019 to now. That's a 3-month move, whereas this is a 1-year move. But look at the similarity, guys, in the structure. Okay, guys. I don't know how many of you will actually get to listen to this, but from my point of view, it's just about structuring the thing. I'll do another one next week, and hopefully after I've done 6 or 7 or 10 of them, you guys will start to find them and start to give me some feedback. If you have any questions, if there's a particular chart you want me to look at, if there's a question about some fundamental thing and how is it going to affect the price of any particular chart, fire it out there, guys, and I will have a look at it. Okay, that'll do us for this week. I'll speak to you all again next week. Remember to look for the charts, and I'll be doing 2 or 3 news and reviews videos as the week goes on. So you can either go to YouTube or onto the website, and you'll find them all there. Okay, bye for now.